Shannon, what would be another major mistake if you were a seller and you had someone approach you with an owner finance situation? What would be a major hurdle that you would want to clear?
So I actually have a real life mistake to share.
Ooh, this
from
is
a seller.
juicy.
It was a seller mistake, but it was also a broker mistake. So I will admit my mistake. The mistake was on my part was that I trusted information given to me by the seller without verifying it tangibly, seeing it for myself. So my seller, this was during a very slow time in the market when you could not move a house, and they needed to move this house, and they did have a buyer willing to pay it, had a good down payment. They were business owners. They just couldn't do the financing at the time. My seller was fine with that. She didn't have a lot in the house. She was good with just getting some payments and getting it, just getting it off her plate. So when I first got the offer, we discussed, I want to say at the time, I don't remember the exact number, but the interest rate that was given to me was a little bit at market or just below market. And I had recommended maybe we counter back a little bit higher than market. I had asked her, how she felt about that interest rate, because we need to make sure that the rate we're taking in covers the rate in which we're reselling it, because you don't want their to amortize faster than yours. So I had the discussion with her. She said, you know what? I'm happy to have a buyer. I don't want to nitpick these things. I'm good with this. Let's go ahead and move forward. So we did. We accepted the offer. We got to everything over to the title company. Title company had it a couple weeks, ran the amortization schedule, which is where my mistake is. I had gone off of information that I was given by her. The interest rate was lower than what she was paying. And it actually would have amortized quicker.
Negatively.
Exactly. And so what we ended up doing, which she was in a fine position and she wasn't too worried about it. She said, look, I will make a $60 payment to escrow every month, for the 5 years we carry it. That wasn't a problem for her. She did that. That was worth it to her to not carry the whole house. She didn't care about it. To me, it was a massive blunder, in my opinion, because we can't go back and renegotiate that now with the buyer. I mean, we tried to, and the buyer was like, no, this is where my payment, this is what you accepted. I don't blame them for not budging on that. I learned a big lesson that day, because from now on, after that, I have said, I would like to see your bank statement. Yeah. I'm not going to allow them to make these kind of decisions on their own. It is ultimately up to them, but I'm going to verify their information, and I'm going to make sure that I let them know all the consequences. So that was a big mistake. It could have been ugly. She didn't care. She was fine. She was happy. We carried it a couple of years. She still made great money off of it. The $60 a month was so much less than what she was paying to carry the home. She wasn't worried about it. Buyer was happy. But I saw the potential for a big mistake there. Yeah, that was a mistake.
And, deficit closing, title companies won't they will not close a deficit closing nowadays. So just to give our audience some context to this, let's say what Shannon's talking about is when an owner owes a mortgage on a property. Let's say I'm selling my $100,000 property, but I owe $50,000 to Wells Fargo and my payment is $500 a month. A new buyer comes in and says, hey, you know what? I want to pay you a really low interest rate and I want my payments to be $450 a month. And you agree to it. That's a deficit closing where your existing mortgage is higher than the new mortgage that you're getting. The new payment that you're getting doesn't cover that. And in that scenario, title companies won't close you because you could say you'll pay that extra $50 a month for the next 5 years, but what happens if you don't?
That's just it. If she hadn't been a trustworthy gal and done what she had said she would, the buyers would have been giving a down payment and then making payments to something that would have been short at the end of it. And that's a problem. But luckily, this was a long time ago. Everybody allowed that to happen. We learn over the years.
It was still willy-nilly back then.
Yeah. We learn over the years and things get tighter and a little bit harder to do. And they worked really good together, and it turned out to be an A-okay situation. She was perfectly happy with it. But that's always stood out in my mind. It was over 20 years ago, and it's always stood out in my mind about what a massive mistake that was. And it taught me a lot to say, I will no longer review a real estate contract with a seller and allow them to make that decision without having some documentation and running those numbers for them and showing them exactly what that's going to mean in the end. So I've changed my ways as well.